All right, welcome back to Following Live. In this segment, we pick a couple markets, a futures, a currency market, and follow it for the month and then review it. It's been an interesting month of volatility. So, no matter the volatility, that's the point of what we're doing. We're just going to follow it with swings, minus all the hoopla. This is not about predicting, it's about following and then joining. So it's been interesting volatility. Hopefully you've stayed out of trouble. The main thing I'd like to encourage everybody to do with the kind of volatility we've been in is to make sure you have your safety valves in place, your risk management. I did do a blog on foundations of trading, a series where I talk a little bit about that. All right, so let's see how our markets did and what we could learn from them. So we left off the bean futures here. We watched it beating the blue swing. We were now measuring for the red swing. So let's see how this market worked out. Now I didn't trade the beans. I did trade the yen. So we're following the beans and the yen this last month. This month we will follow. I think we need to follow the Nasdaq, don't we? We're going to follow the Nasdaq. It's a nice wild market. We'll do the Nasdaq and the Kiwi, the New Zealand. All right, so in this market, so watch, we watched a little transition happening. It beat the blue animal, right? It's just very simple. It beat the blue. We're measuring the other way. Remember LSBs. We're measuring the other way. And so this is what this market did. I didn't have a trade in the beans. I did in the yen, a few trades. But let's see what we can learn. So price kept its swinging, right? Price kept it swinging up. It held this transition, which I talked about in the first video last month, right? Price transitioned here. We can see it. Squeeze, 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 squeeze. We see this tail. Buyers are hitting it. Buyer, whew, they swap it. So this is just the facts check. They did something happened here, and then they beat a high. This is a high. Okay, that's a high. And then price makes a new high. And if you keep measuring, even though they're small new highs, you'll see that price is moving in quite a rhythmic fashion, even though it's a bit funky. So let's see how this market went. Remember, this is about following. It still hasn't beaten this last confirmed blue swing, but we watch and we follow. So the price went boom, boom. It reached up, and we just keep following it. It's turning at about the red swings. And now it quit, right? You see price is starting to quit turning at about the red swing. Something different is going on. And so what happens now is you can see the red swings are trying to, give you a price was going that, it's not going that way anymore. So then what we want to do is we want to turn around, and this becomes a swing. We call this the last swing broke. And then we follow this way. And this is just projecting. This is all having to do with median lines, by the way, right? A to B, project that, and you follow. And so we can see price is now following that path. And then it beat this, right? Did not, if it would have taken out this low, and I'm not going to count this little bitty poke, might have been a rollover for all I know here, then this would have been the big swing to follow down. So this tricky market, it's moving back and forth, but again, we follow. So now that price is turned again, this is one of the key lessons of a trader, to just let go of it should go down, it should go up, it should go down. You have to let go of your position. Not letting go of your position has gotten a lot of traders in trouble in this recent volatility. You have to let go of your opinions. And this is what this practice is helping with. Nice and easy. It changes, you change. If you have an opinion it should go down, you're going to force all kinds of things to make sure it goes down. If you have an opinion it should go up, you're going to force all kinds of things to make sure it should go up. And so that's where this kind of practice helps to train us. And then again, we just turn around and follow. So now, this is live. So now we're literally following this swing. We can forget all of these. And this bigger swing. Like so. Alright? Now let's see what else we can learn about this, because there's a median line lesson in here too. So we see what price did. And notice we measure this. So we're doing basic following reaction legs. But on a median line set, so we'll just do a little bit of a lesson here, so we can expand this following swings, because there's a lot to it. You notice this impulse leg is really large. So watch if you draw a median line from here. A, B, C. Okay? Now a median line is going to take this AB. This is what we're doing when we're following, and it's going to project it from C. See? It's just projecting it. Boom. Boom. That's what a median line set does. It's the same thing we're doing when we project this swing here. And so a median line saying if price expands, it can double that out. So notice, if price expands from this swing, it doubles that out. So we can also look at various expansions. See, that's just the measured swing, and if we double it out, it comes to here. And this is what median lines do. So when you're drawing your median lines from here to here, and you see that we have an extended down leg, just notice the shape of this median line. This is what it captures. Right? It captures, okay, we're not going to push the minor. Instead, we bounce on the other side of the median line, and then we expand. And so median lines can have a particular function when you understand the swings. And then we can imagine this as the related to the median line, the push trade, the expand continue trade, and see some of the blogs, and then the reverse trade. All right, so this was a good market to follow both up and down, back the other way again, and then back the other way again. And there were a few trades to be had if you were able to be fluid as a trader and change with change, not get stuck. All right, so let's look at our next market, the yen. All right, so we were simply following from here. We made this our frame, the major and the minor, and the yen got pretty wild. So whenever this thing comes off, we project. Nothing, right? Nothing. It just rips. I mean, this is extraordinary volatility here, but we're going to follow this thing with swings, one way or the other. So no matter when this thing comes off, I could look at my major and I can look at my minors. This is projecting the center. And this also starts to give you a clue how you can even project that. This is projecting where this will come off, and you can see there's a gap. You can see we have a little mountain here. So this is where that swing projects to. All right. So when that swing gets beat, we start looking the other way. We start doing the other way. That swing got beat. Let go of the long. Don't just keep coming way back here. This was our frame. Let go and follow and then join. This is the fact. No matter how wild it got, it ain't doing that no more. Okay? So now we can turn around and say, all right, we have one swing here. And we can see if price makes another swing here. So that got beat. And we can see price is making this size swing on the way down. Now, I've got a couple trades in here, so there's lots of ways to trade this, and I had several students in here trading this. I'll just show you some of the possibilities and some of the trades that were done. So the market is definitely going down now. We have a rhythm. We have this rhythm and we have this rhythm. We don't really know, right? This is a minor rhythm. This is more of a major rhythm. Minor rhythm, major rhythm. Minor's more of a pushing. You don't really know what's going to happen. It looked like the thing gave up. So I have one possibility for trade up in here, right up against this gap. And take a look, you'll see. Take a look a little close. If you're looking here, you're not going to see it. All right, but now look, read price with me. We're not going to do anything but swings and gaps. Read price with me. Pull back, gap. Stall, gap. Retest with a tail and new low. Right? Do you see it's rhythmic. They're showing us. And so this allows possible trades in here, to get pretty cheap stops actually. And again, this is what median lines do. A to B, measure from C. All right, so we can see where the sellers are here. We can see price hitting the median line. We can see price hitting this rhythm. It's a little bit more, but it's hitting that rhythm. So one particular trade idea in this scenario. Notice I'm just adjusting to what price is doing here. So one particular trade scenario, and several people traded this, including me. One particular trade scenario was to just be in with a stop. And you can see to be in with a 36 stop gets you 3-to-1 to the bottom line. And this is just price rhythming. And obviously price goes a lot farther. But that is a nice, solid trade. Now let me show you how somebody else uses this. They're feeling the dumping going on, but they're not ready to go in right here because price was still going up. But as soon as they felt this thing start to crack, they use, remember, if you're following swings, there's an internal swing here. See, there's an internal swing. You can see there's an internal swing that gets cracked, which then we can follow the other way. So this person wanted to jump on a little bit of momentum and just kept running this thing down with orders up against here. regardless if it goes outside of the line or not. And they were using this particular swing to then exit here. So there's several ways this could be done. Now let's keep following this market out, because there was still yet another option in this guy. So at this point, we have the red, which is the big, and we have the magenta, which is the minor. And we can measure both. And so now you can see we're tracking this red rhythm. The red rhythm. Okay. Another small median line lesson on this is by being able to track swings, right? Identify swings, you can then draw very, very precisely. So in this case, I'm not necessarily going to draw from the magenta because it's a different animal, but I can draw directly from this, and you can make this a modified shift, or you can keep it going as a standard, and that's what the modified shift. And so this is how, when we draw our lines, they do a pretty good job. So notice what I'm doing. I'm drawing from red to red. Here I can draw from magenta to magenta. Here I'm drawing from red to red. And that's price current right now, reaching into its stretch. And this is how we start to enter into the world of lines, drawing very specifically. Alright, so that's that market. Now let's go and find our new markets. Alright, so let's start out with the Nasdaq. It's on everybody's mind, right? Okay, we're going to do the Nasdaq really simply. I'm not going to worry about all of this, okay? If you want to worry about it, put it on a daily chart. Put it on a daily chart like this. If you want to follow swings, follow your major swing, follow your right? Forget about all the hoopla, just follow your swings. We're going to work a 90-minute chart, and we're going to use a very simple frame right here. This is it. We'll mark it here, and we'll mark it here, right? This is live. So, knowing the lessons, map this market with your swings. We don't need to complicate it. Actually, by zooming in like this, it calms our mind. And you'll learn something about price carving out whatever swings are going to be in control. So right away we can take the top, we can take the bottom, and we can say, well, whichever one gets beat is going to give us a reaction leg. We don't know. None of them are beat yet. This is discovery, right? This is not predicting. This is following and then joining. Okay, do we have a swing in the middle of this? We absolutely do. So we can follow this one. This swing is swinging about yay big. And so that is our current Nasdaq map. It took us all of 30 seconds. And we'll follow that. Next, let's look at a New Zealand 90. And again, it doesn't matter. If you want to map out, if this is your frame, okay, then you're going to look and you're going to say, there's my major swing. There's my LSB. If this is your frame, you're going to say, all right, There's my major swing. You're going to take it down here, and you're going to say, ah, okay, there's my swing. Figure out what swing you're trading and trade it. Don't worry about being perfect. Don't, because there'll be one going up, one going down, and you'll end up second guessing yourself till you've driven yourself nuts. The idea isn't to predict, it's to follow and join. So we're going to take this really simply and just start it from here. And if it changes, we will change with change. That's all there is to it. So we have a major swing. This is all I'm going to look at. I am not going to consider anything else on the left. This small piece of data calms my mind, and I can do plenty of trades. This is my major swing that I'm going to project. All right. And then I look and I say, all right, what's my next largest swing? Maybe like this, like this. Okay, there's a little bit of a rhythm going on in here. That's it. And you can see this red, it's like a pusher, right? These are pushing. It's pushing this red. It's pushing, 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 pushing this red. If it were to expand, well, maybe it expands out like this. We don't know. But right now, we'll just do it really simple. There's our major, there's our minor, and we're done. So keep this in mind, that whenever you get overwhelmed with, well, do I go up? Do I go down? Do I use this? Do I focus? We do need to build our relationship to the unknown as traders. This is ever changing, so it's something to practice. All right. Best to you this month.